Here we go.
Hello everyone, this is John with Money on the Floor Currency Trader, and this is the new year, and I'm showing you my favorite trade for the new year and how I'm going to work it, what it looks like, and what's in it. So let's go over that right now. Right now I'm using arrows, which are 1/8 crosses. They're also working off two other indicators, which is the fish and the triangular MACD. So this way it keeps them trending. So basically when you get a buy, you would buy. You wouldn't exit until you get the opposite arrow. Now there is one other thing I exit on, which would be the MACD cross. Now this is the regular MACD, and I just have the cross on it because that's the most important part. If it was to cross red, at that time I would exit all trades because now it's over with. For me, when I get the green signal, it's buying time until I get the opposite. So I only buy in the buy zone. I only sell in the sell zone, which is right here. You have buy zone, sell zone, buy zone. So you get the idea. It's pretty simple. There's a lot of other moving parts to it. It's not very complicated, but it's very effective. And I think that is the most important thing, is that you can, when you find it, you will make money with it. Now how it works is usually the way it works is we run into consolidation, and then out of the consolidation becomes the trade. What I'm looking for is my 1/8 cross arrows. I'm looking for the candles to go above the 20 moving average and the 50 at the same time if possible. That'll be the strongest. So this is a very strong buy right here. I would enter here. We didn't get the cross till this point, and you still had a pullback. So your stop has to definitely go down below this area. Otherwise you will get hit, and that's the problem. Usually I put them down below the arrow. It's usually the safest place, about 5 pips down. Oh, probably, let's see, somewhere right in here. And then as the trade goes into profit, you can keep moving that up to as you go. So you can move it up to the 50 line, just keep following it up is usually where I put it. And the thing is how this works, we'll get into the exiting later, but right now we're still trying to get into the trade. So at this time, we had a arrow back here, but it did not cross above anything here. Here it crossed above. At that point, I would buy. Now remember, the strongest buy is once you get the MACD. So I feel the MACD is coming. We already have a setup. I would buy. It did pull up into profit. At this time, it did pull back. Now that's very common with these trades. Matter of fact, it's common throughout any trade, because anytime you have an impulse move underneath it, next is going to be the pullback to the next impulse. And so anytime you have an impulsive move, you always get a pullback. So you have to expect that. You can wait till that is over with, but every once in a while you don't get much of a pullback and then you miss the trade. So that's the problem. So you never know how it's going to work out, but I do know that a pullback is possible. So how I work it is I would enter here with maybe a 0.5 lot, and as it pulls back and it goes back into play right here, I would enter another 0.5. That would give me one full lot going up. This trade would go into profit and then just keep on going, and then we'll get into the exits on this. Now I like to scale in, and if it keeps going I would add more to it, but I didn't really see a good place here. I guess you could have done 5 lots at this point once it pulled off, but it just depends how good you were at spotting this area. It did, because it wasn't really a pullback. It was a sideways move, even a push up. So this was still a bullish move here, but it was sideways, and you could have put 5 lots at this point, which would give you 6 lots to run up. And then usually what I do is I come over here and get my trend line, and I'll put this probably following the candles. Probably got that one right there, I would see. So I'd put it somewhere right here. And when we got the red candle crossed it, and then I would have put it into a box. Sometimes if I have enough profit, I just exit. It doesn't matter. So there's your box, and we pulled out of it, so it'd stay in the trade. It still popped up. We still had another move. Nothing ever violated this bottom. So we're still going up, and I'd probably come over here and put it in another box because we're going sideways again, and I'd be worried about it. And then we still pulled up. And then we go up, and then right here we go sideways again. And then we get the red candle, which is coming down. And once we went sideways, I'd put it into another box. Right here, I'd spot that and say, okay, if we break that to the bottom, I want out. We did break the bottom, so I would exit the trade. Now, that is one way of running the trade. The other way is, let me get rid of these boxes. Actually, we can leave these so you can see how they are. Is we're looking for it to cross below the 9 and close. This one crossed below, but did not close. This one opened up, but then went back above. This one came below. This one closed below. That would have been my exit at this time right here. I would have been out on this trade right here if I did that. The other way to do it is to close below the 20, which is this other green line. This is the 9 moving average. This is the 20. This is the 50. This is the 200. Now these are exponential, and these are smooth, or simple, excuse me, simple moving averages, the other two. So the other way to do it is when it closes below the 20, and we never had that. So if you did that route, you would still be in the trade. And then once you get a close below the 20, not just a candle through, it has to be the next candle is definitely below, and then you exit the trade. Now sometimes that'll give you less than if you got out right here, so that's the problem. And then you could even do it on the 50, so but then you would, on the end, you would lose a lot more. That's the other problem. And we can see that farther back, maybe another trade right here. Right here we had a nice move down, and we have the actual entry isn't until this point right there. That would be the sell. Went sideways, drop, went sideways again. I would probably add on again. Went sideways, this did pull up, but it went sideways. Now this did close over the 9, so if that was your exit, you would be exiting there. If you were exiting on the 20, then you wouldn't be exiting. Now the other way was the trend line. Let's see how we would have got out there, just in case. We would have broke up, and then I would have put it into a box, and you can see just right away it went down anyway. So, and then we dropped down and kept on going, went sideways again. Many places to add on. So if you had 0.5, you could put another 0.5 right here. Down here I would definitely put 5 lots coming down on this, because this was the main part of the trade, crossing the 200. Looked very powerful. Came on down, I'd probably put another trend line. And then there's some other rules to exit too, so let me show you. So then we broke it with the green candle. Now this much profit, as soon as I saw that, I would exit, but we also got the opposite arrow, and that is a definite exit. So, and we actually had that over here. So if we were following this trade, I didn't even notice this, sorry. We would have got out at this point, got back in, wrote it down. So this is actually 2 trades. So this is an impulse, correction, impulse trade, and it's a 30-minute chart. I don't know if it would have done that on a 1 hour. It's possible, but 30 minutes, 15, 1 hour. This trade is fractal. It works on every time frame. It's just the smaller the time frame, the smaller the trade. So now how I would have done it, if we would have got in on right here, I would have sold, came down to this point, saw the opposite arrow, I probably would have exited. But if I would have saw the trend line, put it in a box, I could have held it just in case. And it was doable to go down, but there's nothing wrong with exiting either. It's like a guaranteed you got that money, and then the next trade sets up and goes down. But if you did hold it, it still worked out and it still came down. So you didn't make any extra here. You just didn't lose the spread. That's all. I think that would be the most important thing. But sometimes guaranteed profit is more important than the spread. So it's for you to decide. And this was the exit down here because it was the opposite arrow. We did get a trend line break, and we also had the triangular MACD turn green. We did have one spot in here too where it was green. So, and that's usually not my exit. My exit for sure is going to be this, and it's also going to be my opposite arrow. So, and in enough profit. But the thing is, this did move up, and if you would have saw the next candle crossing up, I would have been out of this trade no matter what. Even at this point, I would have lost a little bit, but it would have gave me a for sure exit. And that's how I utilize this. It works out really good. I really like this trade a lot. What we do have is, let me find another one here real quick. We'll just go over it one more time. Here's a nice one right here too. We got the arrow. That is not an entry. That is a get ready. We got the MACD with the cross of the MACD, which means it's crossing the 0 line. We're going up. The candle closed above it right here. Everything right here at this point. This candle right here is where I would have entered, and I would have went up and had another pullback. Now this pullback, this is a negative trade, but I would have entered another lot right here. So if I was 0.5 here, I'd be either 0.5 here and then let this run up, sideways move at this point. I try to always get in an extra 5 lots if I can, because I'm usually trading prop firms. I need to make enough money for the day to make it worth. You need to push your trades a little bit to be able to get past the prop firm. Now once you're past and you actually have a funded account, you do not need to put on the 5 anymore. Maybe just the 0.1, the 0.5, and the 0.5 is enough to make you $500 to $600 on this trade, so that you're done trading for the day and you're able to take home that after 24 days of doing that, you do pretty well. So, and that's the whole idea. Is I'm all about prop firms right now, but also I'm about my own live account. But I don't really trade my own money yet because I'm still letting the prop firms make me money until I get to the point where I can have them fund my live accounts for me. Then I will start having live accounts. And there's a lot of other things to get into. I like to use copy traders, which will be another video. And there's more to go. So this is just my favorite trade. And this is how it works. So what we got here is the 50 moving average. This is what I call the money line. And remember, anything above the 50 is going to be making money. So that's why it's called the money line. So if it's below, it's usually a good money line down. I just put a trend line. I catch the end of it. I get out. Same thing here. You cross above, you put a trend line, you just exit. Nothing wrong with that. You can try to use the box to go further, but there's nothing wrong with exiting and keeping your profit. And that's the most important thing and the hardest thing to do. A lot of people watch the profits come and go. At the end of the day, they didn't make anything because they won and then they lost. So it's definitely difficult to keep that profit, and you need something to force you out of the trade. And I also use a robot that can trade this for me, or at least exit for me, either one. So we'll get to that other video. So it's pretty awesome. So we got the 9, the 20, and the 50, the 200. Remember up here, this is another place to add more in. So if we got into this trade, went above here, you would add again, you could add again, you could add again. So these are areas to add on so that you can add to your trade because it's going in the right direction and it's a winning trade. So you want to add to a winning trade when you can, because that is going to upgrade you to much more money instead of just doing one lot all the way up. You go ahead and stack on it and you will make probably 4 times as much as you normally make. So it's pretty awesome. And especially if it's a good long trade, then you could buy a vehicle. So it's pretty good. So we'll get into those later. But this is my favorite trade. So anyway, guys, thank you so much for watching. Let's make money in the markets. And this is a new year, so let's make it productive. Okay, bye-bye.